Happy New Year. I'm Russell with Berkshire Hathaway and the Show Me Como team. And this is the end of 2016 market summary report coming at you from our lobby. So, if you have any questions, please reach out to me at Show Me Como Real Estate on Facebook, or you can give me a call or shoot me a text at 573-289-8442. So, we'll jump in really quick. Starting off here with the active listings, comparing 2015 to 2016. And so there was almost a full 6% drop. And we went from 5,220 in 2015, and that went down to 4,927 for the end of 2016. So we're going to look at a lot of market effects based on supply and demand. These are all correlating pretty strongly. And so next up, we're going to look at the average cumulative days on the market. So this is the time that a house from when the sale sign goes in the yard, for sale sign I should say, goes in the yard, until it actually closes. And we went from 87 days in 2015, and that dropped to 74 days in 2016. So considering that the average time it takes to close a loan for local lenders here in Columbia is around 40 to 45 days, considering that, that's showing that most homes on average are going under contract within just 2 to 3 weeks. And that's the average. So when we go into what's called the absorption rate, this is a really important number. And so it's dropped dropped 25%. So what this means is in 2015, we had an average supply of 4.8 months worth of homes. In 2016, we ended up with 3.8. And so if there were no new listings, no new homes for sale from today forward, we would sell through the existing inventory within about 3.8 months. The National Association of Realtors, in a healthy market, between 5 and 6 months is where that's kind of like the target. That's a strong market. If you go above that, you get into 6, 7, 8 months, that's showing that there's an oversupply. But we are well below that average. And so that's kind of causing, one of the things we'll look at right now is the average sales price. And that increased from $185,400, that was in 2015, we've rose to over $189,000 at the end of 2016. So over a $4,000 average sales price increase from 2015 to 2016. That's kind of going back again to supply and demand. So we have an extremely low supply of homes right now. And there's a lot of buyers out there in every price range. So that's kind of having, everything's correlating together. And as we start to look at what's called the HMI Index, the Housing Market Index. This is looking at a national report. This is coming from the National Association of Home Builders. It's put out each month. And this is a survey that's designed to gauge the pulse of the single-family home market, the new construction permits, the new construction developments across the nation. There's actually builders that participate right here in Columbia and Boone County. So this survey is asking the respondents to rate the conditions presently and also 6 months into the future, as well as traffic for their existing homes that are completed and the showings that they're taking. So this survey has been produced every month since January of 1985. So we're looking at this graph, and this is showing from 1985 to the present day. We just spiked from a 63 up to a 70. And so we're in the range, this is the peak range. I mean, the highest the home market index has ever been is a 78, and we're at a 70. And so one of the things to kind of look at, this housing market index is used by economists, it's used by investors, it's used by the Fed. And so before the housing market crash in 2007 and 8, the index has been right at where we're at today. However, the supply was not. The supply was, we were looking at a 6, 7, and 8 month absorption rate. So there's a big difference nationwide. So across the country, the absorption rate is down. It's under the 5% kind of the good target range. Nationwide, it's around 4.5, and that's coming from the National Association of Realtors. And here in Columbia and Boone County, we're at 3.8 months. So we kind of look at the HMI Index and correlate that. I mean, Boone County and Columbia, we seem like we're in our own little bubble. But considering the construction permits, the new single-family construction permits taken out by the city and the county, if you look right now, there's some interesting things that are happening. So in 2013, In Columbia, there were 554 new construction permits. In 2016, we finished the year with 469. Now, that's a drop of almost 100 permits. However, this can be directly correlated to the amount of land and lots that are available to build on. So in 2013, there were more subdivisions available, some more lots in those subdivisions, I should say. So this is going to be something interesting going forward in 2017 and 2018. The new building code regulations that are coming out, the new zoning regulations for subdivisions, it's going to change dramatically here inside the city limits. And so after basically the last subdivision has been approved before these new rules go into effect. And it's going to have a pretty substantial impact because there's not going to be anything approved possibly for the next year or so. So we're going to see a shift. So I'm kind of anticipating 2017, we're going to see single family home starts in the city drop, whereas in the county, they're going to probably compensate and go up. So there's going to be a little bit, and it's going on right now, kind of a boom in Ashland and in Hallsville, kind of the outlying suburbs. So here it is, 2017. I mean, who's to say in 5 years when we kind of look back and we look at this, these monthly market reports, if Columbia's population continues to grow at the rate it is today, Ashland might be a new suburb of Columbia in just a few years. So looking at the National Association of Realtors, their housing start forecast, and this is also combined with the National Association of Home Builders. So this is the forecast for 2017 and into 2018. We're going to continue to have a pretty strong growth in new construction. And so those actually, we're going to go up close to 30%. We'll be peaking over 1.4 million new homes by the end of 2018. Last but not least is the interest rate forecast. So here it is, the first week in January. Rates right now on an average 30-year fixed loan are about 4.125%, and that's probably going to go up to about 4.5 by the end of 2017. Now, we've already had that first spike. The Fed raised rates this last quarterly meeting. They'll probably raise it again at some point in 2017, but this is expected. And as we look into 2018, that's probably going to rise to about 5.3%. Now that's the projection. That's the forecast by the end of 2018. It's not a guarantee. Hopefully we're kind of close to that. If we're in the low fives, that's a pretty safe area to be on the interest rates. They've been too low for too long, and it's having an impact on inflation and the market. So this will help correct a lot of, hopefully, some of the inflation that we've seen, and possibly it'll level out so the cost of new construction will just kind of stay the same. It won't continue to increase. So if you have any questions, please don't hesitate to give me a call. Again, it's 573-289-8442, or send me a message. Facebook is Show Me Como Real Estate. Hope you guys had a great 2016, and I look forward to helping you in 2017. Thanks.